Yesterday's stock market drop, a sign of bad times? Max Slavo of SHTF reports. Yesterday's stock prices plunged, spurring talks of a panic and comeuppance for the nearly 10-year-old bull market. The sudden 832-point drop in the Dow set people on edge, and here's why it happened seemingly out of nowhere. While there's never a perfect answer to explain how the market can just turn on a dime with a big decline in popular technology stocks, financial pros are attempting to make some sense of the worst day for the Dow since February. The basic, simple explanation appears to be that interest rate hikes and the ongoing trade war are sparking the fears. The 10-year Treasury note keys rate impacts prices on things ranging from fixed rate mortgages to stocks to virtually every financial asset on the planet, and it recently climbed above 3.25% for the first time since May 2011. When you couple the threat of higher borrowing costs on things like houses and cars, and corporate debt to the economic obstacles caused by the US trade war with China, it all takes a second of weakness to set a major sell-off in motion. Market investors are currently fearing the higher rates, which will bump up the cost of loans, ensuring consumers have less disposable income in the very near future. Plus, with the cost of goods and services on the rise because of the tariffs imposed on imported Chinese goods, it will not take long for the average American to feel the pinch, let alone investors. These developments are telling us that the investment environment has become riskier, says Ed Yardeni, the chief investment strategist at Yardeni Research. Fear is rising, says David Kotok, chief investment officer at Cumberland Advisors in Sarasota, Florida. Investors are getting a wake-up call. Kotok went as far as to predict that a full-fledged market correction or a drop of 10% is underway. After the drop of more than 3% on Wednesday, the broad U.S. market, as measured by the Standard & Poor's 500, is now 4.9% off its September 20th record high. The major weighing on stocks is that economic growth will slow down if borrowing costs continue to spike. Analysts say economic growth has no option but to slow down. Rising prices and rising borrowing costs persist. The markets are flushing out economic slowdowns to come around the globe. Another reason why the stock market struggles is that some investors reacting to negative earnings commentary from some companies are unwilling to hold stocks in case results come in worse than expected.